year to date, they've bought more gold. Central bankers have bought more gold so far in 2022 than any year since 1967. In 1967, you'll remember, the dollar was backed by gold.
To get ahead of this, to me, is important. I would rather be a decade early than one day too late, because when it's too late, it's too late. Hi, everyone. This is Mike Maloney, and I've got Jeff Clark with me once again. Jeff, how are you doing?
I'm doing great, Mike, and it's sure great to be back with you. I've missed working with you here.
Yeah, well, you've been launching GoldAdvisor.com, thegoldadvisor.com. How are you doing with all of that? You got back from the New Orleans Investment Conference recently, right?
Yeah, I was there. I was at several conferences and, yes, traveling around to see mine sites and that and doing reports on them. So it's going pretty well over there. People seem to really like it. So I'm pretty happy with it. And, of course, get to talk about my favorite subject, mining stocks. And we've added a couple new picks. I'll be adding a couple more new picks later. So it's a lot of fun, and it's all free to investors. So that's what I want to try to do. So
yeah, that's a great difference in your model. Is it's free.
Right. It is a company sponsorship model, but I only invite companies that I would personally not only own, but be overweight. So that's the difference there. And I provided, newsletter type coverage like I've done in the past, in terms of ongoing developments with the company. So it's a lot of fun. And I think it helps people who maybe aren't terribly familiar with miners, stay abreast of them and what's happening. So yeah, it's a lot of fun. Thank you.
Okay. You just posted an article on GoldSilver.com. How long will it take the Fed to lower the CPI to 2%? 3 questions with troubling answers. So tell us a little bit about this article, because it's got some really great insights.
Mike, I'm an investor too, and I listen to the Fed too, just like everybody else. And when Jerome Powell insisted that he was going to get inflation down to 2%, I'm an analyst, so I had some questions about that and how realistic that is, So basically in this article, I asked 3 questions and go through and answer them with data, with history, with the current circumstance and all that sort of thing. So the first question there, Mike, has hiking rates actually lowered inflation? And you'll see I have a chart there that shows just how aggressive they've been at raising rates. They've raised rates 0.75%, 4 times in a row. It's the most aggressive rate hike in history now, in modern history at least. And you can see there
rate hikes during the Great Depression, and the Fed broke the economy back then. They made some horrendous mistakes during the Great Depression, where they would slam up the rate like a full point at a time. From practically zero. But yes, this is, as far as how far you can go back and create charts on the Federal Reserve's website, that only goes back, the charts for rate hikes only go back to about World War II. But that's long enough to...
Right. Well, and you can see in this chart that, 2% is a long way off. So as aggressive as they have been, and rates are coming down a little bit. I don't know if that's really the Fed or just the slowing economy that you've pointed out many times now. But 2% is a long way off. That's the whole point of that. So, and then my second question was, can inflation's root cause be solved with higher rates? Are they using the right prescription to solve high inflation? And basically, as I point out here, as you've talked about, Mike, it's really more of a supply chain issue. Inflation is usually demand driven. This is more supply chain issues. And until the supply chain is solved, the bottom line is it's going to be very difficult for the Fed to get inflation all the way down to 2%. Do you have any comment on that?
Well, supply chain issues. Yeah, well, inflation over the long run is quantity of currency. And then over the short run, there's a whole bunch of things that affect it. And it's supply and demand it's the reason that if you go to Colombia, a cab ride from the airport to your hotel is going to cost you millions of pesos instead of about $100 or whatever that is, but it's measured in millions of pesos simply because they've printed so many pesos. Things go up and down over the short term due to supply, demand, velocity, shortages, surpluses. So inflation becomes very complex over the short term, and supply chain disruption has kicked it off. My book should have been out a month ago, and there's problems with the printers. There's problems getting boxes to put the cardboard. You not only have supply chain issues with the paper, but then you've got the cardboard box that you've got to put it in to be able to ship to Amazon. Then there's the truckers. They are one of the things that you have identified is that supply chain issues, when you make it harder to do business, and Powell is going to put quite a number of businesses out of business with these higher rates. There's something called zombie companies where they can only afford, they can't quite afford to make the interest payments on their debt out of current cash flow. They don't have enough profits. Well, if they've got short-term debt that has to roll over, and it rolls over into these higher interest rates, that puts them even further negative. And so some of these companies are destined for bankruptcy with the higher rate regime that we've got. And when they go out of business, that affects the supply chain even more. And if you've got a shortage of goods, you have to bid a higher price to get that good. And so, yes, this is a bad spiral. So tell me about your analysis here of it, because I find it fascinating.
Well, the upshot of all this on that issue is that, higher rates make it more difficult and more expensive to do business, not easier. So higher rates don't solve a supply chain issue. They actually make it more difficult. So the supply chain will eventually get resolved, yes, but the Fed's actually in the way of resolving that with higher rates. They're making it more difficult, more expensive. So I just don't see a CPI coming down to 2% anytime soon, at least until the supply chain is completely back to normal. So, yeah. And then the third question I asked there, Mike, was, what does history show about raising rates to bring down high inflation? So I just pulled up a chart of when Paul Volcker was first hired back in 1979, when rates were really high, or inflation was really high. And you can see there, inflation jumped for, at least another year, kept going up after he was hired. And it took a full 5 years for him and the Fed at that time to get inflation, the CPI, down below 3%. 5 years. And some will say, well, inflation was a lot higher then. Well, it's all relative, right? So this percentage drop in the CPI needed today is roughly the same percentage drop that they needed then. So, history shows that it takes a long time to bring a CPI down by raising rates. And any comment on that, Mike?
Well, one of the things I'm noticing here is that the scales on this one, we've got CPI going up to 16%, and over on the right-hand scale, Fed funds rate, the range of the scale range goes up to 25%. So actually, it took a lot more pain than this chart even conveys. If they were both now, if you refer to the previous chart, you'll see that the CPI has a higher scale, going up to 10% on the right side, and the left side, Fed funds rate only goes to 4%. So we're nowhere near getting the Fed funds rate above the rate of inflation. And that's what it took for Paul Volcker to get this under control. But if you adjusted this and made the CPI scale, instead of going up to 16, if that was going up to 25 so that they were equal, what you would see is that the Fed funds rate had to go significantly above the rate of inflation for any of this to start coming down. And it's interesting that it went down to 3% or 3.5% by 83, and then in 84 bounced back up over 4%. They don't have the control that they think. I mean,
thank you. That's the whole point of this article. They can't control it as much as they think they can, and it takes longer than they think it'll take. That's the whole point. Yeah. Thank you.
You've got an electric car now. I've been driving electric cars since my first electric car was a 2010 Tesla Roadster, and I've been driving them for more than a decade now. And when you step on the accelerator, it's instant. After driving a good electric car for a while, when you step into an internal combustion vehicle, it feels broken at first. You step on the accelerator, nothing happens for half of a second. Everything has delay. The transmission is this Band-Aid that's, trying to connect the ground to the engine output and sort of making up for deficiencies, changing gears, kicking up and down. And that's really more what the economy is, a very separate thing from these dials and switches that the Fed has. They think that they're going to dial something up or flip this switch and happen instantly. And it takes a year or 5 years for that to kick in. And in the meantime, they can overestimate the input that is needed to get a result.
That's good. They think they have an electric car, but they really have an internal combustion engine car.
Right. The inputs, the result is very slow compared to when the input happens. There's a big delay. And during that delay, they can be fooled into thinking it's like, look at the delay from all of the QE that they did from 2008 to 2019. They were trying their best to reach 2% inflation, and they couldn't achieve it. And they kept on creating all of this currency.
Right.
And through the method of currency creation, the Fed is sort of handcuffed with the way the Federal Reserve Act is written. They have to go through their primary dealers and bid in the open market. They can only create currency that inflates the financial sector, financial assets. That's the only way that they can do it. And and they don't use that as part of the inflation measurement. So they're busy inflating this stuff over here and measuring this stuff over here, and they can't figure out why this isn't going up. And finally,
that's why they're wrong, because they're misdiagnosing and they're using the wrong prescription. So
and so a year later, a decade later, a decade after all of this input happens, now we've got these huge bubbles, and there are people cashing out of the stock market. That's part of what is driving inflation, is all the currency they injected into the economy because of the lockdowns, and checks directly to consumers. Part of it is people cashing out of inflated assets, and now that is in their bank accounts and no longer just stuck in that sector of the asset inflation. And then part of it is supply chain disruptions, too much demand and not enough supply, which is exactly what I've been going through. It looks like I'm trying to get quotes and a print time for a black and white. My first version is a color version of the book. It's going to be very limited in the number of copies that are available because we can't get paper. And then once we couldn't get paper, we can't get boxes to put the paper in. And then you have to try and get a trucker. And everything is disrupted because of all of this. So it looks like, just if I order right now, the black and white copies of the book, they might be available in, say, April.
Wow.
It is just totally
that's all
insane.
Supply chain delay. Yeah, that's
yeah. So
well, we'll move along here, Mike. But in that article, it's on the goldsilver.com website. You can read it. I actually do ask a fourth question, so you can check that out if you like. So
well, no, I'd like to go over that, because the central banks are taking a particular action, and that action is exactly the action that you and I have been taking for a very, very long time. So tell us about this.
My conclusion there is, the CPI is going to remain elevated, certainly above 2% for longer than I think people think it's going to. And in my opinion, I think we've entered an inflationary cycle. So there's going to be a lot of deflation, recession, that sort of thing. But stagflation means you can have a recession with high inflation. I think that's more likely where we're headed based on that research. But like I asked there,
I used to call it indeflation, where you've got some sectors of the economy deflating while others. So I think
right.
Deflation of the asset prices is going to continue, and the inflation of the retail prices at the grocery store and so on are going to continue.
You might have to trademark that phrase, Mike. I like that word.
I heard it. Jim Poplava said it back in, I think, 2003 or 4 is when I. So I can't really trademark it, but yeah, tell us your conclusion here. What does that?
Well, I said, how do we as investors and citizens, deal with this? Well, one way to answer that is look at what central bankers themselves are doing. And Mike, this was astonishing to me, but central bankers now are buying in record amounts. In fact, year to date, they've bought more gold. Central bankers have bought more gold so far in 2022 than any year since 1967. In 1967, you'll remember, gold was backed, the dollar was backed by gold. That's how long it's been since they've bought this much gold. So that's a clear message, I think, from central bankers.
Yes, it is. If they're buying gold, it's interesting. They're taking action early compared to what the public is doing. Right now, the public isn't paying attention, but I really think that this, I don't know how long this is going to last, whether it's just a couple of months or 6 months or a year, but this is the time to accumulate before the results, this delay of an input, stepping on the accelerator and nothing happens until the mixture in the engine richens up, the revs start to build, the transmission kicks down, and then suddenly the car lunges forward. Well, we're still in that stage where the transmission is kicking down and stuff from all of the currency creation that they did, and then the supply chain disruptions on top of them. And so to get ahead of this, to me, is important. I would rather be a decade early than 1 day too late, because when it's too late, it's too late.
It's too late, right? Okay, well, we're going to move along. If you're liking this video, please hit the like button down there for us. It does help us out, and hit the subscribe button. So, okay, we're going to jump to our quote of the day, actually. Mike's going to read this to us, but stay tuned because we have 2 tweets of the day and a meme of the day coming up as well. So, Mike, share this quote of the day with us.
This is very, very pertinent when it comes to social media and all media these days. When you tear out a man's tongue, you are not proving him a liar. You're only telling the world that you fear what he might say. And boy, with the YouTube purge, YouTube, Facebook, Twitter, I'm somebody that, this is very, very controversial right now. But I love what Elon Musk is doing with Twitter, because he's trying to make it into a platform that has an algorithm that's open source, where everybody can look at it and decide whether it's fair or not. And they're not doing any active censorship or deleting people's channels based on what their beliefs or opinions are. And boy, have we seen a lot of censorship and so on. So this is a very, very appropriate quote of the day.
Yeah, yes, it is.
Yeah.
Okay, and we have 2 tweets of the day as well. And they're actually surveys that came from Mike that he did online on Twitter. And he did one survey, got the results, and then he did a second survey. And that was actually still live, I believe, Mike. But tell us about these surveys and what you found, what the results were.
Well, we've got some different asset classes. If you had to pick one investment to hold for 10 years plus, what would it be? Would it be gold and silver, Bitcoin, bonds, or stocks? And the overwhelming majority said gold and silver. Bitcoin came in at 1/3. It's interesting. Stocks came in at less than 8.5%, and bonds down at 1.3%. But the new poll that we've put out there is the same poll, but we've added that you have to also be able to sleep soundly at night. We have just been through a huge disruption in the crypto sector that, I mean, you know, I am so glad that throughout the years, I've been taking profits from crypto and buying real metals. I just like this physical thing that is three-dimensional. It has mass, you know, you can hold it, it's heavy. And so I've been taking a virtual asset, cryptos, and when I've got profits, taking some of those profits and converting them into real precious metals. And recently, the cryptos have just fallen off of a cliff. The precious metals protected the wealth that I stored in them when I took those profits. Any comments on all of that?
Well, when you add so that you can sleep at night, that's very clear. It has to be gold and silver, but it has to be gold.
Right. The cryptos, you're on the edge of your seat the whole time. The upside might be bigger, but the downside is much bigger also.
Right. Right. So for me, that answer would be gold and silver too, Mike. So
yeah.
Well, on to chart of the day, and this comes from Grady, if I'm saying it right, Grady, I hope. Commodities TA plus cycles, that's his Twitter handle. This very important ratio chart had a shakeout. It is now right up against the blue gates again. That 14-year bullish blue falling wedge tells us that global capital flows are changing right now. So it begins. And basically, this is a chart of the ratio of silver to the S&P 500, the ETF. And you can see it is bumping up against that downtrend line. So look how oversold it is. First of all, that's the first thing that jumped out at me, Mike. But boy, when that thing breaks out, and you can see the peak back in 2011, imagine where this peak went in 1980. So when it breaks out, it's going to be quite something to behold. But what's your reaction to this chart, Mike?
I think it's an amazing chart. I usually, when I do these ratios, it's usually the Dow Gold ratio or the S&P Gold ratio, the Dow Silver ratio. This is reversing it. And so for the viewer, when this is rising, silver is outperforming stocks. And when it's falling, silver is underperforming stocks. And what I see here is that we have put in a pretty nice base at this point, and silver is set to move. This is what will happen. You know, you look at the really long-term trends in investment, and it goes from hard assets. Right now, farmland has started to take off. So hard assets, there's this shift toward commodities and then paper assets. And, you know, now we've got this whole thing with virtual assets with the crypto market. And so I think that hard assets like gold and silver, their day in the sun is just right around the corner here. We've got this nice base built up, and they're ready to take off. A falling wedge like this sort of stores energy, and it's time for the energy to be released in the opposite direction. What's your take?
Right. Well, when it releases, imagine the upside there in this ratio. And again, it is a ratio, so it'll be a combination of silver soaring and common stocks falling. But boy, there's a long way up on that chart, Mike.
Yeah, let me see. The top of this chart is about 38. So, yeah. You want 70 times more shares of the S&P 500. Sell one share now, buy silver, and wait.
Right.
And then sell your silver once it's done performing, and buy 70 shares of the S&P with the proceeds without ever having to do any work to add to your position during that period of time.
Right.
Switching
And
asset
history
classes.
shows this is almost certainly what is going to happen, right?
Yes, right. Okay.
Well, we're going to wrap this up with our meme of the day. Mike has a good one here. So thanks for watching, everyone. And Mike, give us this great meme of the day you have for us.
Okay, journalism. You used to have the press there. That's the guy with the microphone and the little question mark asking the officials or experts and reporting the news to the people, the public, the audience. And now it's the press with their loudspeaker telling the audience what to think. We've got official sources now that also lie and make stuff up. So it's really hard to figure out what is really happening in the world these days. Many years ago, I used to watch Walter Cronkite on the TV, an old guy that just read what happened today and never gave his opinion. Now you have infotainment and everybody's got their spin. And so that's my take on it. So I want to thank you, Jeff, for moderating this, and I want to steer everybody toward the goldadvisor.com. It's free, and you can take a look at what Jeff's picks are. So thanks, Jeff.
Thank you, Mike. It was great to be back with you again, and I'll see you next time.
Okay.
At GoldSilver.com, we have a price match guarantee, free shipping, and global storage options. Learn more about how to invest in precious metals at GoldSilver.com.